Hello and good morning. I welcome you to the morning meeting today on Tuesday, the 13th of March 2018. This is Jens Klatt speaking, exclusively presenting this for me to you for JFD Brokers. We want to have a look at the markets, and all I can say is that in general, the equity markets do not present themselves in a very spectacular way right now. I mean, if you remember, 1 month ago, there was the US inflation published exactly 1 month ago. No, it was the 12th, 14th of February, I'm not sure. But one thing was clear, that the market itself presented itself especially quiet after the big volatility the days before, at the beginning of the month, February. And now the thing is that there might be some hope that we get to see similar developments in the markets today. So let me just scroll back towards this specific day, since the price action back then was really interesting. Was here. So you can see again here, if you zoom into the chart, you can see that there was this bigger drop on the downside at the beginning of the month February, and then you've seen here a very unspectacular trading day. As you can see, the market was really quiet that day, and then at 2:30 p.m. German time, so 1:30 p.m. GMT. Today, because of summertime, we have it at 12:30 p.m. GMT. This data set being published, you saw a huge drop in the DAX in this case, pushing as low as 12,075 points. That was nearly 200 points within minutes, and then a sharp reversal into the evening. So some might say, well, why not why should we see such a development today? And I have to say that I doubt that there's such a huge chance for such a development, and I will tell you why. Because the market currently is in a completely different mode than 1 month before. So first of all, there was a high level of volatility. So the VIX back then, so the volatility index on the S&P 500 stabilized significantly above 20 points. And there's also something very interesting to note here. Tomorrow will be the day when the retail sales will be published. Retail sales last month were published at exact the same time as the inflation data from the US, and came in below expectation. And there you had fears that the market on one hand will face further rate hikes of the Fed, and on the other hand sees a slowdown in economic growth. And there were fears building around stagflation, and that was one of the reasons why the market saw such a sharp drop on the downside. And if you compare this market environment to the current market environment, you will obviously see that there's a big difference between those two market environments, and the chances that we get to see such a high volatility event today are not that high. Based on that, I think that it's probably not unlikely that this quite unspectacular trading mode will continue. That has also to do with the fact that there's still by the way, I'm sorry, this that doesn't bring us anywhere. 1 second. So that was an example of how I would prepare myself for today if there is a push higher. Let's go once again back to the Eurex here. So we have triple witching on Friday, and we still know, and something I want to emphasize here again, 12,500 to 12,600 points on the upside is something, it's a quite significant resistance on the upside. So you can see it here, 500 and 600, and it seems to be unlikely that there will be a sharp rise above that level. Probably it will happen that some market participants probably provoke a short squeeze above 12,500 points, and based on that, as you have seen here several minutes before, several seconds, that was my idea when I said, well, if I was long right now, I probably reduce my position if such a squeeze really happens. Meaning, if there's now a push up to 12,480 to 12,500 points, let's assume I'm trading 6 contracts. I'm taking out the first 2 here. If this squeeze continues, I'll take out another 2 contracts then at something like 550 to 570, and then the rest of the position I would trail the stop via via my classic exit management, like a super trend indicator on a 5-minute time frame, or based on the relative lows in this case, once the market makes new highs and that stuff. So that way I would reduce the position, since I doubt that there will be, or such a move, if it really happens, if such a squeeze occurs, that this will be a sustainable move, but more like a squeeze on the upside, and then the market will probably see a sharper drop again, and trade back in its range currently between 12,400 to 12,500 points. I don't want to go into too much details here, but you can also draw a similar picture for the short side, respectively for the downside, and see that here probably 12,400 points has also some potential in terms of a short squeeze on the downside. But all in all, I weigh the chances something like 30% to get to see such a squeeze within the next days, probably today, not sure, probably initiated by the inflation data from the US, even though I doubt that. So chances are that there's probably such a squeeze today or tomorrow or on Thursday, even though I don't see sustainable moves here, but the market after such a squeeze then trade back in between the range of 12,400 to 12,500 points. 70% of the cases, I think that we don't get to see huge volatility and big moves at all, but could imagine the market to stay calm here right now. And so that's it in fact from my end. So nothing to add here in terms of the DAX. It's in fact really difficult here, I think, to formulate a trading setup. What I did, in fact, in the German version of the morning meeting, I said something between 430. So here around this region is probably a potential long trigger from an intraday perspective, with a stop below the intraday lows, and against which the market can then start another attack at those highs. Currently, it seems as if there's such a drift developing here. Probably it really happens. And if this happens, well, next target 475, it's only 15 points. So as you can see here already, compared to the days and weeks before when volatility was quite high, you can see that volatility currently is really low. So the market is really calm. Nevertheless, if such a push happens again for 70 to 500 on the upside, it's probably a good region to look for a first take profit and scale out of the position. Now, usually I don't do that, but the current market conditions seem to favor such a trading style in this case, because obviously, and again, with the triple witching around the corner and not a quite thin economic calendar, chances are not that high that there will be a huge push on the upside and a huge squeeze developing, strong trend developing. Completely different, in fact, the picture, and that's one of the great things today. It's not that all markets are very calm, but if you look at the Japanese yen crosses, you see the Japanese yen selling off since Asian market hours. If you look at the dollar Japanese yen here, for example, you can see that it started out relatively unspectacular, but then took off from nearly 2 a.m. GMT and never looked back, but pushed above 107 here, can easily stabilize above that level. And I think there's further room on the upside, which could easily bring us up to 107.50, probably 108 in the upcoming hours. Don't ask me why this happens, because there is no real data which came out or comments I've read or something like that, but it just seems as if the Japanese yen is just weak today. It's not just against the US dollar, but it's also against the Canadian dollar, for example, which has seen some bigger losses over the last weeks, as you can see here. And now the market is obviously about to see a further corrective move, which could accelerate in the upcoming hours here, especially in the dollar yen. Let's come back to this currency pair here, especially in dollar yen. We know about the correlation of the US dollar yen and the 10-year yield of UST notes, so 10-year treasury notes. If inflation comes in better than expected, there's a chance that we get to see a push above 2.9% in those 10 years and 10-year yields. And if this happens, this could drive dollar yen even higher and continue, and dollar yen could continue with its current momentum on the upside, even though it's just a very short term look at this currency pair. Even if we can make it up to 107.50, 108, it doesn't necessarily mean that we significantly break it and see a sustainable break here. And even if we do, I still think that dollar Japanese yen has a clear bearish touch as long as it trades on a daily chart below 110.50 here. And yeah, so with this in mind, especially for the Japanese yen short-term traders, intraday traders, be careful and being long Japanese yen today. So currently, it doesn't look as if the current weakness in Japanese yen can be reversed. I mean, that would definitely need some kind of risk aversion. That's also something which I somehow doubt. Even if you get to see bigger volatility, for example, in European equities here, and based on the triple witching on next Friday, that doesn't necessarily mean that there's some kind of risk aversion hitting the markets, even if the market, in this case, the DAX probably drops 200 points. So I doubt that this would stabilize Japanese yen. So as if you're a yen trader, currently you don't want to be short, sorry, not short dollar yen, yes, but long Japanese yen, but instead you want to be short Japanese yen and probably bet that this momentum continues here on the upside, and probably we are aiming for 107.50, 108 in the upcoming hours. Then the main question is, will inflation data at 12:30 p.m. GMT come in better than expected? If so, that's definitely a likely outcome that this momentum will continue here. EURUSD, quite unspectacular. Let's just see how things develop here. Some might probably see potential bearish flag here. Well, the thing is that after the ECB last week, there was momentum on the downside. It couldn't be forthwritten here, based on the fact that unfortunately average hourly earnings didn't come in as expected, but below expectation. And well, non-farm payrolls itself read better than expected. This said, with I'm having a chance here probably to see inflation data coming in better than expected. This could then trigger some further weakness. Something we have definitely to wait for. What I mentioned in the German version of the morning meeting. By the way, let me just have a look here. What just happened there? We just made new daily highs. What just happened there? 1 second. Was there any kind of comment or something? Seems as if someone made a restrictive comment. No, the DAX didn't react at all. Probably it was just a thin market environment. Let me just see. Nothing. Huh. Well, whatever it is. I mean, it's obvious that the EURUSD just made new intraday highs. Nevertheless, what I already mentioned in the German version of the morning meeting was that I said I'd go with a break below 123, yeah, in this case 10 around. So this is in fact the low of the Asia trading range here. I'd probably go short in expectation that there's then a stronger attempt to attack the region around 2270, 2290, and then in fact in this case, if you really see such a bearish flag here developing, well, this could mean or trigger further weakness, which could push us as low as 120, 170, 122.20 on the downside. So target 122, but this definitely needs US inflation data coming in above expectation. So yeah, with this in mind, well, let's just see EURUSD compared to dollar yen, for example, respectively all yen crosses. It's probably not the most interesting currency pair today. And yeah, finally, let's have a look here at gold. Picture is still not that spectacular, but as you can already feel, so I have somehow an opinion that the inflation data probably comes in above expectation. What does this mean? I think it does mean, all in all, that there's a good chance that US dollar could strengthen further, which then means that the gold probably sees some another push on the downside. Let's just see if this really happens or not. Currently, I'm neutral. I have a mid to long-term bullish outlook for gold. There, the main target is to 360, 365 to clear this level, break it, and then there's further strength to be expected. Everything below that is at least neutral, considered neutral. Nevertheless, there's a bullish stance to it. Short term, 1,340, 42 probably here. It's a stronger resistance. So if we clear this level, then the next target is definitely should be found at 360, 365. Nevertheless, everything below that, and nevertheless everything above 1,300, probably slightly below that, 1,295, 290 here, should be considered neutral. And let's just see in which direction US inflation data today at 12:30 p.m. GMT comes out, and if we get to see further volatility then in this case for gold. And yeah, that's it from my end. So talk to you again tomorrow, 10:30 a.m. GMT, and the YouTube channel from JFD Brokers. I just hope that you enjoyed this morning meeting. If you have any questions, please feel free to contact me. Send the mail to send the mail to j.klatt@jfdbrokers.com or contact me via Twitter. And yeah, so that's it from my end. Talk to you again tomorrow. I look forward to it. Have a nice day. See you, and bye bye.